You ever been to one of those crazy auctions? You know, the kind where they're like practically giving away anything from like vintage Pez dispensers to I don't know, like antique tractors. I remember going to one a while back thinking I'd scored like a sweet deal on the vintage record player. Figured I could flip it for a profit, right? Well, it turns out everyone else had the same idea, and the bidding war got way out of hand. But it got me thinking, you know? about how the financial market is basically just this giant, super complex auction with buyers and sellers just battling it out every single day. But instead of Pez dispensers and record players, we're talking about stocks, bonds, currencies, you name it. And just like at any auction, understanding the dynamics of this market, knowing who's in control and when to make your move, it can be the difference between walking away empty handed and, well, hitting the jackpot. So, how do we decode this crazy auction we call the market? That's where this fascinating tool called the market profile comes in. It's like having X ray vision into the market, helping you see beneath the surface and understand the underlying forces driving price action. We're talking about spotting hidden opportunities, anticipating big moves, and basically outsmarting the crowd. Now, before we get into the nitty gritty of the market profile, we need to grasp this fundamental concept. The market operates just like any other auction. Think about it. You've got buyers who are eager to buy at a lower price and sellers who want to sell at a higher price. Their constant back and forth, their bids and offers determine the price we see in the market. It's like a giant tug of war, with the price moving up when buyers are stronger and down when sellers take control. But here's where it gets really interesting. There's another crucial player in this market auction: the locals. Now, these aren't your friendly neighborhood merchants, but rather specialized traders who act as middlemen, constantly facilitating trades and ensuring a smooth flow of transactions. They're kind of like, those seasoned car dealers, always looking to buy low and sell high, making a small profit on each transaction. Understanding what these locals are doing is absolutely crucial because they're like the pulse of the market. They're the ones constantly sensing shifts in buying and selling pressure, and their actions can give us valuable clues about where the market is heading. Now, you might be thinking, how on earth can I decipher what these locals are up to? Well, that's where the magic of the market profile comes in. It gives us a visual representation of this auction process, allowing us to see who's in control, where the key price levels are, and even anticipate potential breakouts or breakdowns. Imagine a bell curve, like the ones from those stats classes. That's essentially what the market profile looks like. The wider part of the curve, what we call the value area, represents the price range where most of the trading activity is concentrated. It's like the sweet spot where buyers and sellers generally agree on a fair price. But then you've got these interesting little tails that stick out at the top and bottom of the curve. These tails tell us that someone, either a buyer or a seller, is really eager to get their order filled, enough to push the price outside that normal trading range. Think of it like this. Let's say you're at an auction for a rare comic book. The bidding is going back and forth, hovering around a certain price range. But then suddenly someone throws out a bid that's way higher than everyone else's. That creates a tail on the high end of the price range, signaling strong buying interest. Similarly, if someone dumps a bunch of those comic books on the market at a price way below the current range, that creates a tail on the low end, indicating strong selling pressure. Now, these tails can sometimes get taken out, meaning the price swings back into the value area. It's like a head fake in basketball, where a player pretends to go one way, then quickly changes direction. But other times, those tails mark the beginning of a significant price move. And that's what we want to be able to identify. Those moments where the market is about to make a decisive move in one direction or another. So the market profile helps us read these tails and other patterns to understand the underlying sentiment of the market. But wait, there's more. It also reveals these fascinating things called auction failures. That's when the price tries to move in one direction, but it just can't seem to gain any traction. It's like trying to push a boulder uphill. You put in all this effort, but the darn thing just rolls back down. These auction failures are like those little tremors before an earthquake. signaling a potential shift in market direction. And they're just one of the many powerful insights the market profile can reveal. We just scratched the surface of what this incredible tool can do. In the next part of our deep dive, we'll delve into how the market profile helps us spot trending markets, identify potential breakouts, and even decipher the actions of those big players who can move the market with a single trade. Stay tuned. All right, so we've talked about how the market's this giant auction, right? And we've got this awesome tool, the market profile, to help us see what's going on under the hood. But here's the thing. Price alone doesn't tell the whole story. We need another piece of the puzzle, and that's volume. Volume, my friends, is like the ultimate truth serum in the market. It tells us whether all this price action we're seeing is for real or just a bunch of noise, like a bunch of pigeons flapping around on Wall Street. Think about it like this. Imagine you're a street vendor selling hot dogs, right? You could jack up the price to like 10 bucks a pop, but if nobody's buying, what's the point? You're just standing there with a bunch of overpriced hot dogs. It's the same in the market. A price move without volume is like a party with no music, kind of pointless. If the price goes up, but there's no volume behind it, it's a sign that not many people are actually convinced. It's like a flimsy house of cards ready to collapse at the slightest breeze. Now, the market profile comes in handy here because it helps us visualize volume patterns. We can see where volume is clustered, and those clusters often line up with key support and resistance levels. It's like having a treasure map showing us where the real battles are being fought between buyers and sellers. And speaking of battles, let's talk about the big players in this market game. The institutional investors, the hedge funds, those folks who can move millions, even billions with a single trade. Now, these guys have access to all sorts of fancy data and algorithms, but guess what? We can track their footprints too. There's this thing called the Liquidity Data Bank, which sounds like something out of a spy movie, right? But it's actually a tool that lets us peek into the minds of these market movers. We can see when they're accumulating positions, distributing their holdings, basically revealing their true perception of value. It's like being able to read the poker faces of the pros. They might be bluffing with their price action, but their volume and positioning tell the real story. For example, let's say you're watching the gold market and you see the price dropping, but then you notice that commercial traders, the folks who actually use gold for jewelry or industrial purposes, are quietly buying up huge amounts. That's a big clue that the smart money sees value at these lower prices. It's like finding out that Warren Buffett is secretly buying up shares of a company that everyone else is dumping. You better believe there's something going on there. So the market profile combined with this liquidity data bank gives us a powerful combo to see the market from a whole new perspective. We can start to anticipate big moves, identify potential traps, and make more informed trading decisions. But here's the thing about all this technical analysis. It's only part of the equation. The other part, and arguably the most important part, is the mental game of trading. We can have all the charts and indicators in the world, but if we don't have the right mindset, we're setting ourselves up for failure. It's like having a Ferrari, but not knowing how to drive stick shift. You might look cool behind the wheel, but you're not going to get very far. So what does it take to master the mental game of trading? Well, for starters, we need to balance our left brain analytical thinking with our right brain intuition. It's like being a detective. You gather all the evidence, analyze the clues, but then you also have to trust your gut. That little voice that whispers, something's not right here. And of course, discipline is key. We need to have a plan, stick to our rules, and not get swayed by emotions like fear and greed. Easier said than done, right? Trust me, I've been there. I remember this one time. I was so convinced this biotech stock was going to be the next big thing. I had done my research, the charts looked promising, and the company had this revolutionary new drug in the pipeline. Figured it was a surefire winner, right? So I piled in way more than I should have convinced I was going to be swimming in profits. You can probably guess what happened next. The FDA rejected their drug application, the stock plummeted, and I was left holding the bag feeling like a total rookie. Talk about a painful lesson in risk management. It's like thinking you can handle that, the spiciest chili in the world, and then realizing halfway through that your mouth is on fire and There's no turning back. But hey, that's how we learn, right? Sometimes you got to get burned to realize you need to wear oven mitts in the market. But here's the silver lining. Even when we make mistakes, even when we take those losses, we gain valuable experience. We learn about the market, we learn about ourselves, and most importantly, we learn to adapt and improve our trading game. So remember that auction analogy we started with. Well, think of the market profile as your secret weapon in this fast-paced, high-stakes auction. It helps you see the playing field more clearly, understand the motives of the other players, and make smarter, more calculated bids. But it's not a magic bullet, you know. It's not going to hand you winning trades on a silver platter. You still got to put in the work, study the charts, analyze the volume, and develop your own intuition about the market. It's like learning to play the piano right. You can have the best instrument, the most talented teacher, but you still got to practice those scales, put in the hours to become a virtuoso. And here's a final thought to chew on. What if everything we think we know about corrective action in the market is wrong? What if it's not just about the price going down after a big rally? What if it's about the market finding a new balance, a new equilibrium, even if that means the price stays elevated for a while? Just something to ponder, you know? Keep an open mind, keep learning, and keep diving deep into the market because there's always something new to discover, some new insight to uncover. Who knows what hidden gems you might find? Thanks for watching. Please subscribe, like, comment, and share. Until then, drive safely and keep learning. I'll catch you on our next deep dive.